In today's weekly Forex forecast, we're talking about the US dollar index, the DXY, the Euro USD, and also the pound USD for the week ending June 7th, 2024. Now, before we get into this, if you do want my help with your trading, there's about 8 hours left to get 90% off lifetime access to both the real-time trading group and also the course that I just launched. So click on the link at the top of this video in the top right corner, and that's going to give you 90% off lifetime access to both. So in the group, you're going to get daily videos, my help with your trading, you're going to get exclusive setups and also see my trades in real time. And the course teaches you how to trade fake outs on the higher time frames that are some of the highest probability setups that I have found in over 20 years of trading. All right, so let's go ahead and get into this forecast here. And it is an abbreviated forecast for two reasons. One, because there's really not a whole lot going on in the markets right now. They are very sideways. And number two, I'm starting to scale back the number of currency pairs that I talk about in these weekly forecasts simply out of respect for paying members. Okay, so we talk about a lot more than this in the group. So it is held in Discord, so it's all real time. And we do also talk about Forex, stocks, crypto, and commodities. All right, so looking at the DXY, the US dollar index. If you guys have seen recent videos, you should have been well prepared for the last couple of weeks because we've seen a continuation of this channel right here that we've talked about now for weeks. Okay, so off of these two lows here in 2024, this one was technically at the end of 2023, but you can see where all year long, essentially, the DXY has been moving higher within this channel. So we saw 3 touches here recently over the past couple of weeks, and you can see where resistance does come in up here around 105 or just above. Okay, so right now we have the market just moving between these two levels. So pretty clear for the week ahead. This is a range-bound market until proven otherwise. So until we either get the DXY breaking above 105, okay, convincingly, and convincingly is the key word there because we do need to see the market clear these highs up here in a convincing manner in order to really break out and flip this area to new support. And the same thing with support down here, okay, 104.45. We would have to see the DXY close convincingly below here on the daily chart to really flip this area to resistance, okay? So as of right now, we just have a range-bound market for the DXY between 105 resistance, or 105.1 to be exact, and support down here at 104.45. Now, as for whether or not I'm bullish or bearish here, I can't justify getting bearish on the dollar while it's above this 104.45 area, simply because, like I mentioned, we have seen the DXY move higher, carving higher highs and higher lows all year long. So despite the fact that a lot of people want to see the dollar fail, we have seen this pattern take shape, over the past few months. So I can't get bearish. I can't justify getting bearish on the dollar while it's above this area down here, okay? But at the same time, I can't turn, moderately or especially aggressively bullish on this market until it gets above 105. Because the fact is that we haven't seen a higher high within this recent downtrend. Okay, so we have seen a series of lower highs and lower lows ever since the high back here in April. Okay, so I do need to see the market take out 105 before I can turn moderately bullish on the dollar. So what I'm going to say about the DXY right now as far as a bias is I am cautiously bullish on the dollar while it's above 104.45. Obviously, if this fails and we get a close down here, then that would change things. If we get a close up here and the market finally takes out 105, then I will turn moderately bullish here with a close above 105.6, turning me more aggressively bullish on the dollar. All right, so that's the landscape here for the DXY as I see it. Again, though, for the week ahead, really just a range-bound market as long as the 104.45 support holds and also 105 resistance. Next up, we have the Euro USD here coming off of that trend line from 2021 that we've talked about. So you can see here on the weekly chart, we have all of these highs back here, including this week here over the past few days. Okay, so we have seen the market bump its head, on this level here for the past couple of weeks. And if we move to the daily chart, you can see where recently we have seen the market retest this level several times. So this was the first retest right here. We then had this candle and also this one. Now, what happened here today, this is something that I mentioned yesterday in the pound forecast, but the euro was very similar. And what I'm referring to here is the sense that we had this area. Okay, so right up here on this upper wick, we had this area up here based on that upper wick that was not retraced. So you can see this upper wick right here on this candle where we got the market coming up here to take out some early shorts and then close below 108.60. Now, this upper wick you can see on the very next candle was not retraced. So what happened is there were a lot of shorts. There was an imbalance through here of people shorting the market. So there was an imbalance here where there was a lot of liquidity left on the table up here in this area. So that's what we saw the euro capture today. And so this move today wasn't really all that surprising. And also the fact that today is the last day of the month, which I talk about that a lot, but on the last day of the month, you do tend to get a lot of erratic price action as institutions close their books. So you have a lot of administrative factors behind these moves. They're not necessarily conviction driven just because, again, you do have those institutions closing out their books. So for the week ahead, guys, it is, a range bound market. Clearly we have the market moving between this area down here. So just below 1.08, this is going to be support. You've got resistance now coming in at this upper wick here today. So very similar to this upper wick, how we saw that get filled, there's a good chance that we see the euro fill this area sometime early next week. Now, if the market can hold that, okay, then we could see this range continue here. So something like this over the first, few days of next week. All right, so more ranging price action until proven otherwise. And I think that's the main point here with the euro is that until we get the market either closing up here convincingly or closing down here, this is just a range bound market between this area around 1.086 and the support level down here just below 1.08. So a very similar look for the pound, and no surprise there considering the fact that the euro and the pound do tend to move together most of the time. So you have these two highs up here. Back here in 2021, you've got this high, this one here, and this one recently. Okay, so, very similar to the euro. Again, the market coming off of that 2021 trend line. And down here, we do have this trend line off of these recent lows. So this explains why the last year and a half for the pound, same thing for the euro. We have seen a lot of this coiling action here, and the market is moving into the apex of this pattern. So like I've said recently, I do expect over the next, let's say 6 to 12 months for us to get, some incredible breakouts from these markets. But right now we are dealing with a range bound market. So we have to respect that fact because this is a range bound market until proven otherwise. So when we look at the daily chart, this is the level up here that I mentioned a couple of times over the past few weeks. So long before the pound got up here, I was saying to watch for 1.28, and the market retested this basically to the pip. This was 1.2801, and this right here was about 120 pip drop. Now, at the moment, you can see where the pound is finding support down here, right around 1.2685. Okay, so we have the market finding support down here and a resistance up here, which is currently coming in just below 1.28 for next week. Okay, so, again, similar to the euro, we do have a range-bound market here, and this is range-bound until proven otherwise. Now, one thing that could set up for next week, okay, is the fact that we do have the potential for a bit of a topping pattern developing on the 4-hour time frame. So if we were to see the pound get below this area down here, okay, on both a 4-hour and daily closing basis, taking out these lows, then it could give us at least short-term top down here toward levels like 1.256. All right, so, again, though, this is going to be support. You don't want to short into support. If anything, if you're going to play the range and we do get to move higher first, then you're looking for shorts up here in this area. Now, as always, this is just my opinion, not financial advice, but you'd be looking for shorts up here at these highs. And alternatively, if we were to get a close down here in this area, okay, so close below here, sustain break below, you'd be looking for a sweep of those early shorts, followed by that move lower toward levels like 1.256. So like I've said recently, this is just a range-bound market until proven otherwise, right? And considering the fact that the market is coming off of resistance up here, I do have to favor shorts while below 1.28. But that is the key. As long as the market is below this area up here, then again, I'm going to favor shorts with the idea that this is a short-term top at least for the market to pull back down here toward levels like 1.256. Now, keep in mind too, that if you look here at these candles on the daily chart, notice this breakout candle right here, okay? This breakout candle had a very shallow retrace. Even this big green candle, these candles, even though we got a decent little retrace, there is still an imbalance down here in the market. Okay, so there's imbalances down here to where if we were to see something like this next week and these lows fail, then this down here, this pocket, could become a magnet for the pound. Now, alternatively, if we see the market take out this trend line up here and then also take out all these highs and close up here in this area, then that, of course, would be bullish for the pound. All right, so as of right now, again, I'm cautiously bullish on the US dollar. and I have to favor shorts against 1.28 as long as that holds up here for the pound. Subscribe to the channel and click the bell icon for notifications. Don't forget to claim your 90% off lifetime access to the trading group and also course. You have about 8 hours left before that discount expires. Have a great weekend, and I will talk to you again next week.